Good afternoon, Outliers. How are y'all doing? I have crazy news. Like, unbelievable. You're not going to believe this news. So, I tried to have a meeting with Jeremy. They ghosted me twice. Tom Nash was on yesterday's live stream. Shot him an email. It's like, what's up, Tom? Want to hang? Just got off the phone with him. We're going to start doing something together. I don't know when. I don't know where. I don't know how. But I know who. Me and Tom Nash. And it's going to be seriously cool. I'm so stoked about this, right? He said that the moment that I pulled out the bullhorn of shame, he was like, that's my dude. That's the dude to hang out with. So we're going to do some really, really cool stuff. So I'm super, super stoked about it. And I'm also super stoked to see my friend Dustin. How you doing, bud? Nathan and I are going to catch up in person next Friday. Nathan, please don't kill me. Steven, good to see you. The Decadent Wolf is here. Ian, newbie from Down Under. Love your philosophy. OPP. Let's do this. Joe, what's up? Happy Valentine's Day. Bjorn. Coach B is here. Randy, it's been ages. Where have you been? Randy's one of our long timers. Where you been, dude? Garfield, hey. Dr. J, first time for the Dr. J. Glad you made it. Morning, everybody. Lars Lander, first time here. Awesome. Glad you made it, my friend. Happy Valentine's Day. Mikey Mike says, hello. Ross is here. Where's Bob? Everybody look for Bob. Did Bob make it? Hey, there's Bob. Bob and Ross are here. Way to go, guys. Glad you both made it today. And now I've lost where Ross was. There he is. Okay. Brian, good to see you. Luca Tubo, it's been a while. Where you been? Hey, Chris, you see an order block over Apple? We can take a look at it. Remind me later. Jean-Louis is here. Jeremy again? No, not Jeremy again. Holy smokes, yes. That's great. Great collab. Bravo Fit says, hey, everybody, new here. Just curious if joining Outlier on the special sale today includes potentially Chris's trade. Of course it does. Of course it does. And the way that you can see all of my trades, hold tight, which I put on 2 trades in January, 0 trades in February. And the last time I traded before January was November 22nd. So it ain't all that often. But my trades are in the Outlier trading room section of the Discord. And we had to lock it down because people were adding their own comments to it. But now it's just going to be my trades. It was a funny story. When we did lock it down, I found that I had unlimited power. And then Mark came through and he said, not so fast, my friend. So the moderators can get in, which I didn't realize, but still funny. But yeah, you'll get all my trades right there. In fact, I know some of our Outliers, and I don't know how to do this, but they set it so they get alerts when anything is posted on that particular Discord channel. So you should be good. Jim is here. Lars says, cool, awesome. Teaming up with Tommy Boy. Tom is here. Holy shit, he scared me. Awesome. J Mac is here. Evening all from the UK. Hello. Man, happy Friday. Looking forward to it. I'm going to warn you, though. I do want a selfie or 3. Bro, I'll only give you a selfie if I'm allowed to flex in it. Oh, my wife, I'm so embarrassing to her. What's up, Chad? Luca Tubo got the offer. Expires today. Thanks to Mahesh. Tom Nash in the hood. Excellent. Okay, cool. So Tom actually, when we were on the phone just a little bit ago, told me about this video he made. So we're going to jump in and we're going to watch this video. And let's see where it goes. I don't know where it's going to go, but I have a feeling. All right, y'all ready?
All right, folks. Gather around the campfire. Bring Grandpa out of the basement. Because today we have an all-star, an all-time Hall of Famer of financial disasters. Now, this is the story about one man YOLOing $1.2 million of his grandpa's money into DJT, Donald J. Trump stock, the Trump social stock, and he literally had to watch this whole thing evaporate, his entire stack. It's gone. Now, this is going to be painful. It's going to be hilarious. It's going to be tragic. And more importantly, it's going to serve as an important way to learn a lesson on how to manage your investments in the right way so this never happens to you. Sit back, grab a drink, get Grandpa, and let's look at this like a pathological autopsy of this train wreck.
Oh, I'm actually quite excited about this, Tom. I got my DuckTales mug. I'm set. Let's do this.
So, Act 1, our man has the YOLO mentality. He decides what every retail investor with 2 months of experience in the market is the best thing ever, to YOLO into one stock. He steps on Wall Street Bets on Reddit, as you can see here on the side screen, right? And he announces that he just YOLO. By the way, YOLO means you only live once. $1.2 million, his entire grandpa's money, on call options on DJT. Now, what does it?
So we got a lot to break down here. First, never go full port into anything, ever. Like, I can't imagine going full port into anything. Second, doing it with somebody else's money? God, how reckless could you be? Like, I couldn't imagine taking family's money and saying, let's do this. Pathological autopsy. I love it.
What does it mean? He wasn't buying the stock. That's a whole different story. I mean, he was making a gamble, a bet that Donald J. Trump, DJT, is going to skyrocket to $40 per share. Now, obviously, I'm going to cut to the end of the story here. That never happened. Otherwise, he would not be crying on Reddit on losing his entire stack of money. It's gone, right? So lesson number 1. What just happened here? Let's break it down. Let's analyze this. First of all,
So I'll give my perspective before Tom jumps in. First, we can see at that time, current DJT price. I don't see dates on here. Date bought 12.5. Here we go. DJT. Let's do this. DJT. All right. So 12.5 was here. All right. So on 12.5, let's go the close price. Close price was around 33.72. I don't know what date that's supposed to be. Doesn't say exactly what date this was, but current DJT price is 30.76. So time elapsed from close here around 33.78. Where is 30.76? Roughly right there. There's 30.76. I bet you that was it right there. So that was December 5th to February 3rd, right? Not a whole lot happened from A to B, right? I mean, from here to here, down 8%, right? But the problem was that he didn't capitalize on this, right? So he had his 10 over the 20, price over the 50, so it was trending upward. I bet you he saw a ton of gains right here, and then it came down close under the 10, which would have been an exit signal for me right there. If I had traded that, I would have made $1.66, 5%. That's okay. I can live with that. But I bet you he didn't. I bet you he saw that and he's like, I'm not scared. I'm not scared. This is grandpa's money. What do I got to worry about? And then it continued on. And probably at this point, he was like, freaking yeah, let's go. Right? Almost new highs right here. And then the next, December 30th, it opens down. He's like, oh crap, I don't know about this. And then I bet you January 13th, bro felt like the biggest genius in the world. But do you see what I see? Right after Christmas, right after the election, or not the election, but right before the inauguration, I should say. Do you see what I see? I see an order block big as, not big as Texas, big as Oklahoma, sitting right there. And what would you know? What would you know? It got rejected. It didn't just get rejected, it got monkey hammered, right? So this high down to here, 17% right after hitting this order block. Tell me order blocks don't work. Go ahead. Go ahead in the chat. Tell me order blocks don't work. Another prime example of how great order blocks are. Completely rejected to death. And then, he's flat on the position about that point right there. Might be up a couple bucks with his theta decay, probably not doing so great. But then it could just continues on down like this. So that is my guess about what happened. As Randy says, that's probably the biggest order block he's ever seen. Brutal. Hey, Christian. Absolutely brutal. Now, if he had followed us, if he was an outlier and could see on the chart, he had his trend template right. But one of my rules, as far as exiting a trade, when it gets up in that order block, let me show you real quick, right quick. Here, if your trade is going up in the order block, that's cool. Let it run. But close at the end of the day if on the 5-minute chart, the 10 and 20 don't cross back down. if it pops up in there and the 5 and 20, or I'm sorry, the 10 and 20. If the 10 and 20 do cross down, that's your exit signal midday. That's a day trade that I'm going to get out. So that is how Chris would trade this. And that's how Chris would have saved most of those gains. So at least you're in the right spot now. I hope he's watching today. But I'm excited to hear what Tom has to say.
We have trading versus investing. Now, this dude was not investing. He was gambling. No trader that I can think of that has any sort of qualifications would have thought that that was a good idea. That's not.
Also, I failed to mention this earlier. This was a 40 strike price. And the current price when he bought it was $33.76. So it had to get up to the $40 mark to expire in the money expiration. But he also paid for that option. Okay, break even. Oh my gosh, he paid $7 for those options as well. So his break even point was $47.65, way up here. Way up here. Now that, of course, would be at expiration. Right. So here's a pro tip, right? If you're going to buy options, which is what I do, I buy them deep in the money, so I don't have to worry about that theta decay. I try and keep that as small as possible. And we actually are going to cover a lot of theta decay today. That was a question going on in the Discord. I'm here for you. We'll cover that. Perfect example, by the way, of why you don't buy out of the money options. Randy says lotto play, super out of the money. Not only was it super out of the money, super expensive out of the money.
Even trading, that's just gambling. And when you gamble, your entire 1.2 million fortune, because that is a fortune, on one thing, one occurrence to happen. The same thing that happens in casino, folks. The house always wins. No different here. Now, instead of managing his risk, instead of being smart, he was an idiot. Now, he convinced himself fully. He wrote really lengthy explanations on Reddit why the thesis is correct, why this must happen. Basically convinced himself that this is the best thing since sliced bread. And he fell into the one trap, which we always warn you from. Right? As an investor in the stock market, you have to understand that if you do either of these things, you're going to get screwed. If you fall in love with the story too much and don't pay attention to the fundamentals, you're going to get wiped out. If you ignore the story and just look at the numbers, the fundamentals, without understanding the business model and how this thing is supposed to actually make money beyond the balance sheet and the current financials, you're also going to get screwed. You have to find a balance between the good story, but also the fundamentals to support it. None of this was done here. This was delusion level 1 quintillion.
I was really hoping he would say only price pays. I was waiting for it, Tom. I was waiting for it so hard for you to say only price pays. And so, to Tom's point, because Tom and I have very different philosophies in the way that we work. In fact, Tom explained it all over the phone to me earlier, so I appreciate that. But this person basically, was writing these posts saying what the stock, say it in the chat, Sean already said it, say it in the chat, what the stock should do. Right? What's the most dangerous word in all of finance? It's, how many letters is that? SHOULD. That's the most dangerous 6 letters in finance right there. Should. This is what happens when you rely on shoulds, right? When you don't have a plan, you get monkey hammered. You get monkey hammered to death. You climb the wall of worry, and then you go down. You climb the slope of hope, and then you go down the wall of worry, where the monkey hammers live, right? Like, he got absolutely traunched. Yeah, why it should happen. Should, could, and would. Brian says should. In Discord, at Chase Pearson. What did I miss? Oh, hey, Chase, what's up? And we get the golden ticket trading strategy. Cheers and great content. Yes, my friend, go over into the Discord and jump into the, where's it at? VIP. There it is. VIP Investors Toolkit. We got so many thousands of resources here for you. I mean, we load it up. So there you go. Coach B, thanks for that.
Basically, he was going, I'm your messiah. What was that? Now, I talked about it multiple times with my community and in my academy. That thing is called the Dunning-Kruger effect. Now, the Dunning-Kruger effect is very interesting because what it does, it has this false sense of security that a lot of these newcomers to the market actually use to make stupid decisions. You begin doing something, you think that you're not good at it, then you make a couple of good trades, you make some money, and all of a sudden, after 2 months in the market, you're convinced that you are the next Warren Buffett. Your expertise level is now 100. Of course, that's fake. That's the Dunning-Kruger effect, because then you get slapped across the face like this guy. You understand you know nothing, and the actual learning process starts, so that maybe in 5 years you can say, well, I'm starting to get this. I'm starting to learn this. And in 10 years you say, well, this is very complicated, but I'm starting to understand this. Of course, these new traders, they get wrecked because
Bro, that happened to me. I blew up my account twice. It cost me $200,000 to figure this out. Don't tell my wife. Like, legit. I thought I was a genius. And yet I was just losing money hand over fist, thinking I was a genius. That's so common. If that's happened to you, trust me, it happened to me.
because they have this false sense of security. It's like a baby that doesn't understand the risk climbing on the ledge. That baby doesn't understand that ledge is dangerous. The same thing with this guy. Now, I have to explain something to you guys. It's a tragic story. It's a tragic story. And if you actually go deeper here, you'll find out how tragic that is, because he lost his wife. She divorced him. He basically, he ruined his entire life.
Okay, I'm so glad. Tom, this is going to be a good ranking, my friend. How often do I talk about the mental capital of trading? Quite often, right? It is one thing to lock up your money into a stock, right? But you also lock up your brain, lock up your emotions, lock up your mental capacity into how the stock is doing if you've gone too big. If you lose any winks of sleep at night, you are too big. That is so well. I'm super glad Tom brought that up, because the mental capital of trading goes far beyond the actual dollars, right? Dude destroyed his life, lost his wife. I don't know if he has kids. She probably took the kids. She probably took the house if they had a house. I mean, that's not a good place to be. And all he had to do, sounds crazy, all he had to do is position size correctly. And then, of course, follow the outlier trend template and know where the order blocks are. But all he had to do was position size correctly or take a small loss, right? Take a small loss. You're not going to win 100% of the time, right? Even with the outlier trend template, you might make a couple bucks and lose a couple bucks. But when you're right, and the 10, 20, 50 are all pointing up to Canada, you can ride that thing to the sunset. So the mental capital is real. Absolutely real. Another awesome Chris quote. Down the wall of worry is where the monkey hammers live. Tom's showing us level 5 of the trend. Jose, I've noticed this behavior. Even when a person buys a new phone or car, an excuse why they need it, even if the buy makes no sense, right? I mean, if I had a Ferrari in my garage and I showed it in every video, I may not make a lot of sense to have that Ferrari in my garage that I show in every video. And I certainly wouldn't be asking you guys who are losing money hand over fist with my horrible advice. What color should I wrap my Ferrari in next? I don't know. In my opinion, that's kind of what he's talking about there. An excuse when they need it, when the buy makes no sense at all. Brian, position sizing would be a good video to make. Every video where I trade talks about position sizing. Every video I talk about has position sizing when I make trades.
It's a tragedy. It's nothing to laugh about. But hey, guess what? The stock market doesn't give a fuck about your feelings. The stock market...
I didn't see that. Oh, I got a cramp in my side from that one. Ow, that was good.
gives zero fucks about how this makes you feel. There's no mercy. There's no, oh my God, I need a second chance. It is ruthless. Doesn't give a shit. Nobody's going to give your money back. It's gone. The stock does not care about your emotions. The stock doesn't care about your thesis. It's going to do whatever it's going to do, especially...
Dude, I love it. Tom's saying only price pays. The stock doesn't give a crap what you think. The stock doesn't give a crap about your emotions. The stock's going to do what the stock's going to do. In other words, only price pays.
Especially when you're not even investing. Let's say he was investing for the long haul and he was saying, well, I'm going to hold this for the next 10 years and whatever, who knows, right? Then you have a shot. But he was doing options. So basically, if something doesn't happen short term in the stock market, he loses. How can you predict what can happen in the stock market in the short term? Very few people can, and I would argue almost nobody really can short term predict this. Here's the thing. You can see the development in this guy. In the beginning, that was YOLO and the good thesis. Then the reality starts creeping in. Then he gets scared. But he falls into this market timing myth, which a lot of new investors fall, where they make this rookie mistake where they think that despite the fact that nobody else could do this consistently, they can time the market with their 2 months of experience in the stock market. And he thought, well, no, nobody can do this, but I, with my 60 days of experience, I can do this. I'm better than the pros. Now, this is exactly why we teach DCA investing, dollar cost averaging. You don't YOLO into a position. Nevertheless, gambling on a call option, right? You don't YOLO buying a lottery ticket, hoping that something happens. If you slowly accumulate stocks of great companies, great businesses, and you do that over the course of 10 years, you're actually putting yourself in a chance to win, to create generational wealth, to actually become rich, slow, but become rich.
As long as the stock price goes up. As long as it goes up.
Not this garbage, not gambling. I mean, what's the difference between this guy and somebody who basically puts all his money on red on the roulette table? No risk management, no understanding of the market, nothing. Now, he found out the hard way, and the reason I'm making today's video is because I want you to learn from this man's mistakes. I don't want to see anybody ever again in this situation, ever. One thing I hear people ask me all the time about, well, Tom, we know that you're a long-term investor and you don't fuck with trading and all, but how about options, Tom? How about options? Here's options for you. This is options. You want this?
Yeah. And this is why when I trade options, I'm deep in the money, right? Deep in the money. And I am watching that stock like a hawk. I want that stock to be working for me. And the moment it's not, I'm out of there. Of course, things can gap and that sucks, but that's part of the game. And that's why you position size correctly, because that's an insurance contract. If things don't go your way, I'm not going to blow out. Right. This is a really good video.
You want this garbage? Options kill portfolios. Options kill portfolios.
They absolutely can if you don't know how to use them. And it took me years to figure that out. I thought I was a genius by selling options, right? Like I would sell calls, sell puts all day long, thinking I was a genius and consistently lose. And then buying out of the money options, like he's talking about here, right? You've got a window. If that stock doesn't move like you need it to, you're toast.
When you have an expiration date on a certain event of happening, not happening in the short term in the stock market, this is gambling. It's stupid. The house always wins. This is why I always tell you precisely the one point I always make. DCA, dollar cost average, buy equity over the long haul. Save more money, buy better stocks, invest in good companies, hold it for 10, 20 years, retire with more money than you had before. It's a safe way. Just get an ETF, S&P 500, and DCA into it for 20 years. You're going to outperform 85% of professional.
Oh, yeah. I mean, if you, and that's what I say. If you really want to be passive, find a target, go Google, I'm going to retire in 2065. What is my target date fund? Google will tell you, and then just throw money at it every 2 weeks. If you want to be passive like that, by all means, that's how you do it.
Fund managers, for God's sakes. But no, not this guy. This motherfucker went full kamikaze into 1.2 fucking million of loss of a fucking nothing. Why did this happen? Because this man thought that hoping that this thing is going to turn around is some sort of an investing strategy. I mean, it's not. Hope is not a strategy. Hopium is not an investing strategy. He actually doubled down when he started getting losses, which is definitely not an investing strategy, because you have to have discipline. You have to have a strategy. You have to understand what the risks are, right? So if you've done the work, right, and let's say that you are convinced that PJT is the next best thing since sliced bread, like this guy was. Why would you do this option garbage? Start buying just a little bit of stocks, write it out, and see how it goes. Kind of analyze your thesis, see if anything changed, if the company is still solid. If the company is still solid, stock is dropping, you may consider dollar cost averaging, and then you double down if it drops. Long-term investing. Of course, long-term DCA doesn't work if you pick garbage stocks. There's no point in doubling down in a falling knife. But if you pick good companies that you're not going to do well over the next 10, 15 years.
Well said. You're not going to do well on a falling knife like DCA into AMD. It's not going to happen.
Generational companies. Why risk it?
Justin, we're going to have to talk after this. All right. I'm going to call you to the principal's office. Nobody gets a 7.
With these options. Now, to me, it's really sad because there was a simple way to avoid all this garbage. There was a simple way to avoid this disaster, right? We can laugh at this dude all day long. That would be a layup, but that would be just pure Jerry Springer. Who cares? We want to learn something from this, right? We want to get better because of things like this. So let's use his experience to actually generate some insight, right? So number one, whether you are an investor or a trader, there's one cardinal rule that you never, ever, ever, ever break. Do not.
Okay. Whether you're an investor or a trader, cardinal rule, never break. Get y'all's notepads out. Hang on. Get mine real quick. All right. Got the notepad. I'm ready.
Invest or trade in something that you do not understand. He didn't understand options. He didn't understand the risks. He didn't understand how it works, because obviously if he had, he would have done that stupid $40 call option And it cost them. It cost them everything, the money, the relationship, everything. So number one, do not invest in what you don't understand. Understand the investment vehicle.
1,000,000% agree with that. 1,000,000% agree with that.
People invest in leverage ETF, not understanding what leverage means. People invest in options, not understanding what
Bro, I did leverage ETFs before I got to options, thinking I was a genius too. I was there.
options mean. If you're not as sophisticated, professional money managers, do not go to leverage ETF, do not go into options. All of this is unnecessary for the simple everyday investor. It is unnecessary. Study the company, research the business, see if this business can be dominant in its category for the next 10 years. Look at the fundamentals, look at the balance sheet, look at the cash flow statement, look at the income statement, look at everything, analyze the management, do the legwork. Warren Buffett once said that he, in his first...
Dude, I never skip leg day. Nobody skips leg day in my house. You should see my kids. But somewhat disagree with Tom. If you are going to get into a stock, knowing all the balance sheets, all the fundamentals, all that stuff, to me, doesn't help my case. This is something I picked up from market wizard Tom Basso. I remember having this conversation with him specifically because I just got into a stock I'd never even heard of, like literally never heard of before about 5 minutes before I bought it. And I was like, Tom, you ever do that? And he's like, yeah, all the time. I was like, really? He goes, yeah, I don't care what the stock is. And this is not me. This is Tom Basso saying this. Market wizard Tom Basso. His nickname is Mr. Serenity. I don't care what the stock is. If it's going up, I'm interested. And I'm interested as long as it continues to go up. And you can buy any stock on any day at any time, as long as you know how much risk you're going to put on it, how much room you're going to let it tell you to find out if it's working. And then just let it go. It sounds so flippant because it is. But on the same side, he is so focused on how only price pays that he can have that attitude, that laissez-faire attitude. Dave's Mackina nailed it. It's the OPP. Yeah, you know me.
First investment, when he invested in a railroad company, read 500 pages of the United States Railroad Manual. That's not the most interesting reading, I promise you. That's the level of commitment you need to have. If you don't want to research individual stocks and drill down, just buy S&P 500 and write it out for the next 20 years. There's no shame in that. In fact, I think that's the smartest move for 80% of investors out there.
I agree. That is a smart move for 80% of people out there, right? If you don't want to be involved, just buy the index. Don't talk about it.
And of course, as long as you DCA, dollar cost average, into the S&P 500, as long as you DCA, dollar cost average, into good stocks, generational companies, not gambles, companies that are going to be dominant over the next 10 years. Like,
it's hard to do this with Tom watching. As long as you're doing it on a stock that is moving up the slope of hope, as long as you're doing this on a stock where we're looking at a stage 2 uptrend, as long as you're doing it that way, I have no issue with averaging up. Averaging up makes total sense to me, right? If you're dollar cost averaging into anything, the asset will only pay if it's higher today, right? You can dollar cost average all the way down if you want, but there's no guarantee that it's going to go up. And what you did was you pull down your average price of your loser the whole way down. Now, Tom, I hate to do this to you. But I didn't say it. Paul Tudor Jones said it. Go after him. I didn't say it. He said it. He said it. Wasn't me.
like Microsoft, Apple, Google, Tesla, Palantir, companies are not going anywhere. Amazon, Meta. I mean, there's so many good examples of companies that are not going anywhere. TSMC, ASML, CrowdStrike. There's so many good companies. And
so I wonder, because he's listing out all these companies, right? A lot of them are doing great. Like Meta. I hadn't looked at Meta in a while. I pulled it up yesterday and I was like, whoa, daggone, that's what you want. That. I'd pay money to buy that. I would even buy that with your money. You know what I wouldn't buy with your money? That. I wouldn't buy that with your money. Certainly wouldn't buy it with my money. I wouldn't buy that. Hell no. So where I'm going with that is, if you are going to dollar cost average into something, do it on the way up. If you got money to burn and you got a trade that's working, go into it, right? In fact, that's what the turtle traders would tell you, right? Averaging up into a stock so you can maximize your gains on the way up. That's how they would do it. You know what? Companies that aren't going anywhere, like Kodak. What about Coke? Coca-Cola. That dude has seen a market cycle. Look at this. Stage 1, stage 2, stage 3, stage 4. Stage 1 started again. Stage 2. I don't know what the hell is going on with Coke, but it's on a rip right here. This is a market cycle. Stage 1, 2, 3, 4, 1, 2. That's pretty cool, right? That's pretty cool. So let's do this. I want to shift gears because I really want to talk about really want to give some options theory lessons today. So put it in the chat what you feel this video was. Let's rank this video. I didn't introduce myself. Holy crap. My name is Christopher Yule. I was mentored by 5 of the market wizards, the best traders of all time. I've been successfully trading since 2009, and this is where we save time, make money, and start winning with less risk together as a team. Now, like I say, I want you to rank this video. Do me a favor of doing that, but subscribe if you haven't already. So video ranking, this is what we get to choose from, right? But let me make this abundantly clear for you in the back that aren't listening. There are no 7s. Nobody gets a 7. And if you dare put a 7, I will send a monkey hammer to your house. And it ain't gonna be good. It ain't gonna be good at all. So what do you rank it? What do you rank it? Let's see. We've got 8s, 9s, 10s, 9s. Tom gives it a 2. God, I literally am having cramps up today. I don't know. I didn't eat enough bananas or something. Okay, that was a good one. 8.5, 8, 6, 9, 699, 699. We're not quite at 7, 699, 9, 8, 6, 8. LOL, solid 8. Another 8. I'm gonna give it 8. I'll give it a solid 8 for sure. I'll give it an 8 point. I'll give it an 8.5. I'll throw it up in an 8.5. That was great. I enjoyed that. That's the kind of stuff that we don't get enough of, right? That's the stuff you don't see enough of on YouTube, which is balancing risk to return, right? Understanding the product that you're talking about, understanding the product that you're putting your hard-earned money into, understanding the product that like you saved for how many years to have this account? You had how many sacrifices to build it up this high? And you just want to YOLO into this call option that you have no idea what you're doing? What are you doing? So that's where I come in. But before we do that, it's Friday. You know what happens on Fridays? We have our weekly winner circle, and it's a big one this week. Oh my gosh. So every Friday, we do the weekly winners circle. Now, this is going to take me a hot minute to get through all these names because you guys like ripped up the Discord this week. The way that we do this is we just ask you to go into our Discord, into the share your big wins section, and tell us what you did this week, right? It can be a win. It can be a loss. That's okay. But we want to know what you're doing, how you're using OVTLYR, how it's helping you. That's the objective here. It's just you sharing with us how it helps you. And then we have a little game to see who's going to win a $10 Amazon gift card, right? So I have to go back so far. Last Friday was the 7th. I got to scroll up a long way because you guys have y'all have put so much in the share your big wins Discord this week. Like it's unbelievable. And I have to catch all of these names. So talk amongst your friends here for a moment. Oh, there was me. My big win this week was hitting 20,000 subscribers. I was so stoked. I was in church and, of course I'm like trying to peek at my phone during mass and I'm like, and then my wife's sister and her family, they come with us. And I was like, look, how cool is that? So that was really cool. Thank you all for subscribing. Y'all are awesome. All right. So Book 3M won last week. So what we're going to do here, this is where we're going to start. And this is going to take me a minute. So I'm going to write down all the names. So Joey, we've got David, we've got Marco B. We scroll. Book 3M is not eligible to win 2 weeks in a row. We've got ESAT. Whoa, that's Nathan. I'm not eligible, clearly. Dave, Mari, Wes, Sean K. This one was, I forwarded this in here. Who is this? Colecat or Colecal. Okay, at Colecal. I think I have to scroll back up again. Just a second. Like I said, y'all are like crazy this week. Here we are. No. I think there was one more. Nope. Still got to go. Look at this. Look at how many people were sharing their wins this week. It's crazy. I'm still not up there. Okay. This one, got it. I'm back up to speed. Baseball Junior 14. And we got Warfish. And continue on. We've got Joey F. We've got, or Joe, Joeyf. We've got Brian. Not the same Brian as we normally have. I'm going to put different Brian. Different. The Brian we normally have has a purple avatar. I know that. Then we've got Creso. We've got Vigil. We've got Albertone. We've got Vigil, Albertone. Mahesh is ineligible. We've got Paladin. We've got same guys. Continuing on here. There's Mark. He doesn't count. Then we've got the Angry Baker. We've got A, B, C, Z. So many winners this week. Dude, I'm so happy for you guys. Mr. Garg. Got Hectech. Continuing on here, Dave. Brian Rules. That was Brian I'm looking up. Brian Rules. I met Brian in Atlanta. He didn't kill me. So I have faith that Nathan won't kill me either. Then we've got Jim. We've got Rick in roll. We've got Pock. Jim R. I mean, like some of these stories are just so cool, right? Not specifically Tesla, but before finding OVTLYR, I had acquired 500 shares of TSLL, a Tesla ETF, based on a recommendation from another YouTuber. After a few weeks of watching Chris's videos, the lights started to come on, and I started to go to cash and sold my TSLL shares for 180% profit. Since then, TSL has dropped by approximately 40%. Chris and OVTLYR saved me over $5,000, likely more, as it would have. He probably still would have been holding to the position. Like, that's the kind of stories that we hear constantly. How cool is that? How cool is that? Let's continue on. I got Ryan M. We've got Mikey Mike. Got Dan Whitcomb. Seriously, so many people. Zap. Peter Piper. Tech. Laurent UK. We've got the Decadent Wolf. Joey F. We already got him. And continue on. Dave, I want to share his story. Bought Intel yesterday. Sold today for a 56% gain overnight. Way to go. This person said, Garfield, saying, hello all. Had OVTLYR less than a week and it was the best few trading days ever. How cool is that? Okay, we're almost to the bottom, finally. So that was Garfield. Christoph. Said, almost paid for my OVTLYR sub for a year today. Not bad for my first week of trading. Oh my gosh, way to go, dude. Wes, did we get Wes on here already? Yeah, we got Wes on here already. Dave, we got already, or David, we got already. Gimme, 312, Hardy Van, and Hog Iron Skull. Hardy Van, Joey, we already got him. P. Taylor, 1976. Randy. Look at this. Randy bought VNet on an OVTLYR buy on February 4th and closed after earnings for $11 a share for a 50% gain. Grim, I know there are so many wins. Grim 309. Ozzy Ian. All right, we're done. Ozzy Ian's last. That was a lot. How many people is that this week? 43 of you. You know what? it's not fair to just have one winner with 43. We're going to have two. We're going to have two winners with 43 gentlemen and ladies in the chat. So here's what we're going to do. We're going to go to random.org. And we're going to see if we're human. Hang on. Hang on. Should I click it? Yes, verification successful. We're going to split this. Let's split it in half, right? So 43 divided by 2 is 21 and a half. So 21 of you will be on one side and 22 of you will be on the other. Okay. So we'll split it here. Insert. So I'm going to assign you each a number. And I will not pick the winner. I'll let fate decide who the winner is. I'll let fate decide who will be the winner today. Y'all ready? First group goes from Joey to Hectech. So between 1 and 22. All right. Who's going to be the winner? No whammies, no whammies, no whammies. 3, 2, 1. Number 20. So the first winner is ABCZ. Outstanding. Congratulations to you. Let's do our second winner. This is through 1 of 21. All right. Last one. Ready? Who's going to be the next winner? 3, 2, 1. Number one. Number 1 was Brian Rules. What's up, Brian? Brian is a long timer, let me tell you. Outstanding. So ABCZ and Brian Rules are our winners this week. Let me put that in the chat. ABCZ and at Brian Rules are our 2 winners this week. Congratulations to both of you guys. And April will shoot you over that gift card here on Monday. Congratulations to both of you. But yeah, like, I love the fact that we can have you tell us how you're using the product, right? How you are using OVTLYR. And I mean, so many of you are saying how many years worth of annual subscription that you just saved or won on a single trade. Let's freaking go. Let's freaking go. Everybody's saying that is a huge group of winners. Yeah, they're outliers. That's what they call, right? Outliers is synonymous with winners these days. Congratulations to everybody. Absolutely. Hey, there's Brian. Woohoo. Let's go. Ian, we're all winners in this place. Well done, guys. Well done for sure. So congratulations to you all. Make sure to share your stories in the Discord. I want to give you a $10 Amazon gift card next week, but you got to tell everybody about OVTLYR. All right, that's the first rule. And you got to hit the like button. Now, we'll jump back into trading and I'll show you, or hopefully do a little bit of lessons on options here. That's my objective with this. So real quick, what is OVTLYR and how does it work? Well, old Uncle Warren used to say, be fearful when others are greedy and greedy when others are fearful. An OVTLYR shows you if investors are acting irrationally fearful or greedy and by how much, which allows you to get into the stock before the OVTLYR move. Now you can still get into the OVTLYR annual plan for 64% off. Mahesh sent me a Skype last night. He's like, listen, today's Valentine's. People are going to be out on the town doing all kinds of stuff. And we don't want to interrupt what they're up to. So we want to make this go until Sunday at midnight into Monday morning, that Sunday at midnight. So we're still going to give you an opportunity to have a great time this week. Well, I'm sorry, have a great time tonight and still get the annual pass for 64% off. But this will legitimately end Sunday night at midnight. If you're already on a monthly trial and want to convert, just shoot us an email and we'll take care of the rest. Now, my style of trading, I call it the golden ticket trading strategy, and only price pays with the 10 over the 20, price over the 50. So let's go look at that real quick on the market. So we're going to go SPY. New all-time highs today, if you can imagine. Zoom in. It's not zooming. There we go. We got the 10 over the 20, price over the 50. We got a bullish trend right here. Next, market breadth. Market breadth has been going out for a minute. Let's go to market breadth real quick. We do have a sell signal on the SPY that just came yesterday. And if market breadth is going out, we got a sell signal on the SPY. I can imagine we're about to see a pullback. I don't know when. I don't know how, man. The market's not closed. Oh, that's right. I meant Tuesday. I meant Tuesday we'll be back. I don't know. We'll do it on Tuesday. We'll send you out gift cards on Tuesday for sure. The market breadth is pulling out. Right. So we got a sell signal on the SPY. We got market breadth going down. To me, this is red flag city. No way. The master key keeps me out. When the SPY has a bearish signal, the market trend is bullish. The market breadth is bearish. sector breadth is bearish. They need to all be in alignment. When they're all in alignment, trading feels effortless. So for me, I'm not going to make any trades. The master key's all locked up right now. But let's change gears a little bit. And there were some questions about what is time decay? What is theta decay? And so I wanted to give some real world examples. So I'm going to log into Tradier. Give me a second. I thought I was already logged in. Give me a second. I'm going to have to pull that back up. And we're going to talk about the differences between in the money options and what that looks like versus out of the money options versus at the money options. Basically, if you're going to buy an option, like in the example earlier with DJT, and we'll look at DJT as our example here, hopefully. They got plenty of options to look at. If you're buying something out of the money, that is absolutely, and will forever be, a YOLO trade, a lottery ticket. Buying something deep in the money, the way that I trade it, is using leverage. It's like a futures contract, okay? So let's break this down. So first, extrinsic value. This is the value that goes to zero on every option, on every stock, on every time period, every time, right? Extrinsic value goes to zero. You want to pay as little of that as possible, right? Because that's the part that will eat your lunch. Now let's go to DJT. There we go. We got lots of options here. Very cool. The current price of DJT is $30.28. So at the money is highlighted here at $30. I know it's difficult to see, but this is slightly blue and this is black down here. I might be able to change my settings to make it a little bit easier to read. But if you look at the extrinsic value down here, the extrinsic value is basically the same as, let me change this to midpoint. Oh, that's not changing midpoint. Okay, that's not doing what I wanted. Never mind. Hang on. I'm still not familiar. I just changed over to Tradier. I thought I could click this down and it would give me a different option. Okay, we won't worry about that for now. The extrinsic value, when it's out of the money, is basically the midpoint between these two, right? So if we look at the 35 strike, 125, 129, 127 is halfway in between the two, right? So every single bit of it is extrinsic value. If you go in the money, you now have extrinsic plus intrinsic value, the same, right? Where you have both. Interestingly, some of this shows negative extrinsic value, which that won't happen. You're never going to get filled on that. But that's because the spread is widening out here. But you can see the difference here in the extrinsic value. If we go $5 out of the money, so 30 to 35, we've got a $1.27 extrinsic value, which goes to zero every time. If we go $5 in the money, we have 70 cents of extrinsic value. Okay, so now it's like 64 cents. It's about half as much, right? You're going deeper in the money here, and you're paying half as much as what will evaporate, right? You're essentially saying, I don't want as much of my investment to evaporate as I can. So I'm going to go in the money instead of out of the money. Now let's talk about that evaporation. What does that look like? Let me find the right spot here real quick. Here. This is what it looks like over time, right? So the longer out in time you go, imagine this is 90 days out in the future. Not much is going to go on, right? But the closer it gets to this expiration here, actually I could draw on this. The closer it gets to this expiration point, the faster this accelerates. The faster this accelerates. Now, let me show you a different version. Where is that picture? This picture. Open image in new tab. Zoom. Okay. Do you see the difference? These are your out of the money options, the at the money options, the ones that are so much extrinsic value. Whereas the in the money option, if I'm only spending 20% of the total price in extrinsic value, whereas this is 100% in extrinsic value, and they're both going to terminate at the same point, one of them has to go on a lot longer tangent, a lot faster slope than this one has to. Do we understand what I mean by that? If my option that I buy deep in the money is $10, and 20% of that is the extrinsic value, only 20% has to decay to zero. But if you're buying the out of the money options and you're paying $10 for that one, just using round numbers here, okay? All $10 of that has to go to zero. because of that different starting point, the percentage move per day changes drastically. Like my percentage, if there were 20 days, let's use that. If there were 20 days to expiration right here, this only has to decay by 1% per day, right? If there's 20 days for this one here, the out of the money option or the at the money option, this now has to decay by 100% in the same 20 days because it expires at the same point, yet there is so much more extrinsic value to get rid of. Now, if you're selling the options, you're stoked because that's what you're trying to collect is all of that. But if you're buying the options, there is no sense at all in buying an out of the money option to me. I couldn't imagine, I wouldn't buy it with your money. But if you're buying deep in the money options, you could actually do really well and pay very little on that extrinsic value. Now, let me show you a big pro tip. This is something I got from Larry Hite, the very first billion-dollar hedge fund manager. Like when he explained it to me, I'm like, wait, what did you say? You can basically get a 90% discount on every stock you buy by doing this. Now, I know it sounds crazy. Tom Nash is going to flip his shit when he hears this. But hear me out. Let's say I go to the 80 delta, right? In this case, that's the 26 strike. It's got 72 cents of extrinsic value on a $5.20 option. So 72 divided by 520. So 0.72 divided by 5.2. So that's 13% of this option is extrinsic value. Okay, that's not so bad. I like that actually. Now, if I were to get this one, I would get, and this isn't the best example, but it's still going to prove my point out. We can do another example too. I'm going to get control of 100 shares, and it's only going to cost me $5.30. Wait, what? This is a $26 stock. Or I'm sorry, it's a $30 stock at the money. But I'm going to control 100 shares for $5.25. So if I bought 100 shares, so 30 times 100 is $3,000. But if I buy this one option right here that's in the money for $5.25 divided by 3,000 is basically saying that I'm getting it for 17.5% of retail price. I'm getting, so -1, I'm getting an 82.5% discount. You can see it higher, you can see it lower. I generally say 90% because that's a nice round number. Did I blow your mind yet? I can control 100 shares for the price of $5 per share rather than buying 100 shares at $30 per share. Crazy, right? When Larry had to explain that to me, I'm like, whoa, hang on here. This is nuts. And that's why you want to pay as little extrinsic value as possible, because that goes down, right? That eats into your profits. But you can control 100 shares for, let's use round numbers, 80 to 90% less than buying those same 100 shares outright. Absolutely crazy. Theta is an absolute killer for out of the money options. Yeah. Are you here on Monday? No, I'm not. So I hope that it makes sense, right? I know some people were asking about theta decay. Theta decay happens on every stock every time, but you can control how much that theta decay works against you by choosing to go in the money where there's less to decay versus going out of the money where it will all decay. Do y'all have any questions? This is a deep, educational theory lesson. I love me some options. I don't know anybody that knows more about options than I do. Like, I love this stuff. I eat, breathe, and sleep options, right? So in the chat, please let me know. Coach B asks, mention how options decay correlates to a market holiday like Monday and OPEX weekly next Friday. It's really the same, right? I mean, they already got it baked in, right? This point here to this point here is going to decay over time, okay? If you have a weekend and, okay, let's do this. Let's say that this is an option that expires on Monday and you're like, oh, bro, I'm going to buy it out of the money because I know that the stock is going to double in value by Monday, right? And I'm just going to be a genius. So you got, let's say you got a 3-day weekend coming up. So let's just say it's Tuesday. So on Tuesday, your option expires. 100% of that extrinsic value is going down, and it's going down fast. So if you bought it today, by Tuesday at close, it's out. It's gone. I have a story about this. I remember going to watch the not original, but the new It movie, the first one, not the second one, and being in the movie theater and having some sort of like existential crisis about this. And I remember specifically watching the movie, looking at my phone, watching the movie, looking at my phone, watching the movie, looking at my phone. And I'm like, holy shit. My money is evaporating. Like I'm watching it tick by. Every moment that ticks by is less money I have in my account. It's just like that. Because the market makers are constantly repricing this because they have to reprice it down to zero by the end of the day. And I'm looking at like, well, I made some mistakes here. This was not a great trade. And by the end of the day, it finished out of the money, worthless. And it's not like a stock where if you, it's not like a stock where there's no like finite point to it, right? There is a finite point to these options. So if I had held stock during that time, would have made any difference at all. No difference whatsoever. But because those options had an expiration point and they were going to expire out of the money, it doesn't, I don't think you grasp what worthless means until you've seen an option you bought go to zero. I'm telling you, not worth less, like from 100 to 99. Like, oh man, that sucks. I lost 1%. No, it's worthless. Like nothing. Like absolutely nothing. You know, at the end of Willy Wonka, where he's like, you get nothing. Nothing. That's what you get when your option expires out of the money. Nothing. And it sucks. Sucks real hard. So even if you're in the money, that extrinsic value goes to zero, but you still have the intrinsic moneyness of it. It's a different game when you go deep in the money than it is if you go out of the money. And that's why I would never do it. Tyler asks, would you ever go for leaps? I don't ever do leaps. But that's how I trade, right? Because I only look, my trades are generally 7-10 days total. So I only look for about 21 days, give or take. I'll go one expiration sooner or farther, depending. But really that's my wheelhouse. So that's all I ever look at. But you know, if you're looking at a leap option, right? If you're looking at a leap option, let's try this again. And it's, let's say it's 180 days to expiration. This is going to tick by really slowly, right? This is still going to be 100% will expire. 100% will go to zero, but it's going to tick by really slowly. And then once you get closer, it's going to go by really fast. So hope that helps. Coach B says, yes, well done, Chris. Great job explaining. Massive knowledge drop. Thank you. This is my jam. Happens really fast on zero DTE. Yeah. Richard, I don't understand options and I really don't wanna. I'll just buy the stock outright and let the price dictate the stock to make money. Dude, that is totally 1,000% acceptable. And I don't want you to ever feel guilty about that. You do you. You do you and don't stress on it, right? Don't stress on it at all. And I'm not stressing because I don't have any trades today. Now, listen, we got a 3-day weekend here. I'm not going to see you on Monday, but I hope that your President's Day is incredible. I hope you celebrate the fact that we're making America great again. I'm just putting that out there. But of course, tell me in the chat what you are trading and be sure to come back on Tuesday. Be sure to come back on Tuesday, not Monday, where I'll help you save time, make money, and start doing with less risk together as a team. Now, YouTube is going to pop up a couple recommended videos. I recommend you watch one of them, and also recommend you have the best weekend of your life. We'll talk soon.